Welcome to a January 2022, that's right, 2022 edition of Matt's Minutes. Just wanted to touch base as we have winded down the year. We're accelerating rather quickly into the new year and wanted to provide some updates to all of you. So thank you so much for tuning in. Hopefully you all had a wonderful, relaxing, peaceful holiday season as we move into the new year. So as we kind of looked at the end of 2020, there were some really interesting statistics and data that I researched I thought would be worth sharing. So in 2020, the 5 largest companies in the S&P 500 ended up being responsible for about 25% of the market's overall return of the S&P 500. So that's a pretty staggering statistic. What's even more interesting is if you broke out most individual stocks and separated them from any benchmarks or broad market indices that they are part of, the average U.S. stock, according to bull market research, was down nearly 30% from its previous high. I'm going to say that again. The average individual U.S. stock was down nearly 30% from its previous high. And why I wanted to bring that up is a 10% drop is a correction, a 20% drop is bear market territory. This is saying that a lot of U.S. stocks ended down 30% from their highs. So there's quite a divergence really when you look at the stock market and individual holdings and different sectors. And in fact, what was quite fascinating is the more diversified you were, the harder it was to compare or compete with broad benchmarks when you look at 2022. And in fact, the volatility index, which measures movement up and down of the markets, hasn't really come down to historical averages now in more than 2 years, which makes logical sense given, coming up in February and March of 2022, we'll have been really dealing with the pandemic in the U.S. and the U.S. markets since the spring of 2020. So with everything going on, there's one of my puppies who wanted to be part of the video. With everything going on, the pandemic, unprecedented government spending and stimulus, 0 to negative interest rates, tsunami-like volatility, it's probably more important than ever to maintain a diversified portfolio. And we talk a lot about your risk score and the risk tolerance, so we use a tool called Riskalyze that helps us manage tolerance ranges for your portfolio. So we're going to continue to have a strong communication strategy and interest in talking to you using Riskalyze language. That'll help us guide your portfolio allocation to something that you're comfortable with and helps you over time to achieve your goals. As we head into 2022, there are certainly some headwinds, there's certainly some tailwinds. It's largely anticipated now that the Federal Reserve will actually do some interest rate hikes. I just mentioned how low we've been for so long. What typically happens as interest rates go up is you get into a window where that creates some choppiness and downward trends short term in the markets. And what really happens is smaller and mid-sized companies and even some large companies that sometimes rely on borrowing money at lower interest rates to finance aggressive growth and innovation plans. As rates go up, there's a theory that it becomes more challenging for them to borrow. Their cost of capital goes up, therefore their earnings over time goes down. So that will create some volatility, but really the underlying theory is that interest rates are going to be going up because the underlying economy is getting stronger and stronger. So that's a good sign, but it doesn't mean then that correlates exactly to markets moving in a straight line. So wanted to kind of keep that in mind as we move forward. And again, I touched on Riskalyze and making sure we find the appropriate balance for each of you individually. Having things like 1 to 10 risk scores on certain investments, whether that could be a fixed indexed annuity, could be a low duration liquid bond or fixed income holding. Those are really good balances to the volatility side on the other side of the market. And so we also want to have a continued layering effect wherever possible for those of you drawing monthly income on your portfolio so that month to month we hopefully don't have to depend on what the market's doing to help solve for your cash flow. So the sun has set on another year. If you are watching this video, and I'm obviously here recording it, you and I are among the fortunate ones. Not everyone was so fortunate. Within the Richmond Brothers family of clients, we've certainly had over the last 1 to 2 years shared in the loss of a number of really great people through the pandemic. And so I just wanted to reflect a little bit as we head into the new year. We're honored to be part of your life. Our goal is to help with these videos, educate, inform, and help you navigate and guide through whatever is going on out there in the financial world. We are honored to be part of your life. We're grateful that you're part of our lives. And as always, if you have any questions, please feel free to reach out directly, questions@richmondbrothers.com or 517-435-4040. Thank you so much for tuning in, and cheers to hopefully a healthy start to the new year where we can continue to reflect on what is really important in all of our lives. Have a wonderful start, and I'll be back in touch soon.